Hey everybody, welcome back to Financial Tip Friday. Hope you've all had a great week so far. It feels like summer is officially here, and with that, I want to talk about something that often gets brought up in the summertime, and that's where you're living. So I've had a lot of questions related to moving, mortgage rates, everything in between. So I wouldn't view this as much of a tip as simply just having a little discussion, maybe some food for thought. But the core idea I hear from a lot of people is I don't want to have a mortgage. This is, especially applicable to those who are a little bit older, nearing retirement. The idea that you're going to be completely debt free is a wonderful thing. But there are a few financial factors you can consider with that. And we're not gearing this conversation just to those who are older. Whether you are in your late 20s, early 30s looking to buy your first home, or as I mentioned, nearing retirement and considering downsizing. Everyone has to live somewhere. But getting back to our core idea. So right now we're seeing interest rates, essentially double from where they were a few years ago. I like talking in easy round numbers, so let's say that we're seeing interest rates on mortgages right around 7%. You could easily get 3 to 3.5% a couple years ago, and that makes a big difference. So the idea of not carrying that debt or not paying any additional interest is certainly appealing to everybody. I mean, who would want to pay more in interest than you really have to? But for those who feel like they're stuck in a home at a lower interest rate, or those who really want to move, maybe they've outgrown their house and they're looking at the cost to do so, it can be daunting. So I want to think about here and give you all a couple numbers. So let's say that you have a mortgage of $300,000 at current interest rates. So we're going to deal with 7%. At current interest rates, your monthly payment is just shy of $2,000 a month. $1,995. Now that is just principal and interest. That's not talking about your escrow payments, so property taxes and insurance. Now let's say that you purchased this property a few years ago. You have the same $300,000 mortgage, but you're at 3.5% versus 7%. The cost savings there is over $650 a month just in what you're paying towards interest. So it certainly makes a big deal, or makes a big difference. But some food for thought I wanted to give people is, I love the saying, you are going to marry the home and date the rate. None of us know where interest rates are going. There's a lot of chatter that they will be lowered at some point in the future, but don't hold your breath on that happening immediately. But say you fall in love with a particular property, don't let a higher interest rate necessarily scare you away from making that change. Because if rates do come down in the future, you always have the ability to refinance at a lower rate. Also, getting back to what I was saying at the beginning, the idea of having no mortgage or accelerating your payments. If you were to think about accelerating your payments, let's work with that same $300,000 scenario. So if you paid an additional $200 a month, it would cut your mortgage down by 7 years. That makes a big difference in saving you over $100,000 in interest payments. But let's jump to the idea. Let's say that you have, a little bit left on your mortgage or a sizable amount, and you're thinking, I just want to pay this off entirely. Historically speaking, if you look at what you're paying in interest versus what you could make on your investments, should you have that money invested wisely, a conservative investment return given particular time periods, you could easily look at 7 to 10%. So is it possible that if you invested the money, you would come out better ahead than if you paid off your mortgage? It's possible. It's not always going to be true. And know that investments certainly carry risk. There's also a risk with having no mortgage. People would ask that question, what kind of risk is there with that, Zach? What is very, very rare that I've ever seen anyone at any stage in life, whether you're downsizing, moving, whatever it may be, actually take money from the sale of their home. Meaning, if you sold your home for $500,000, it's very, very rare for me to see anyone go and buy something for $400,000 and be able to put some money in their pocket. You typically end up spending about the same amount, even if you're downsizing. And yes, you can always tap into the equity in your home, but as opposed to having that money growing for you over time, it can be a pretty powerful thing. So really, this was just more of a discussion this Friday. I hope it didn't come across as rambling, but it's important for you to think about where you are at and your goals moving forward. It always comes back to your cash flow and how you feel financially. This isn't an exact science. Everyone's going to approach this a little bit differently. So I hope you all have a wonderful weekend. Looking forward to seeing you next week. And we're going to do a conversation regarding Roth IRAs and the concept behind backdoor conversions. Take care.